Hello,
Good afternoon.
trust you're good. Today I just wanted to look on back duty tax investigation. Because I just want to push for the completion of the syllabus. And when I look on the meaning of the back duty, we are saying it is just a term which is basically used to refer to assessment and collection of taxes in areas. And a taxpayer is considered to have committed an offense for not paying the taxes and for not filing their tax return on time. And that is why we normally have some penalties. That is why we normally have some issues with interest, which normally accrues for late payments and also for non-filing of the returns. Now, when you look on the tax areas, they normally arise due to the following circumstances. One, we are discussing about a declaration of incomes. Two, overstatement of expenses. And we know the overstatement basically applies where an organization is trying to overstate and understate this, overstate the expense and understate the sales, so that they can be able to report some losses and fail to pay any taxes. The same applies to under declaration of incomes. Number four, we are talking about plain mean really an expense which one is not entitled to. And when you look on the issues, we are saying if the revenue authority has a reason to suspect that the taxpayer has not made the complete and accurate returns of incomes, it may direct that a tax investigation, this should be tax investigation, that the tax investigation to be carried out. So sometimes we might be asking ourselves, what is a tax investigation? And basically, I might be explaining it in a different terms, and I can say it is just an in-depth examination by the Revenue Authority to the taxpayer to ascertain whether there are any chances of tax evasion. So those are the things that we can be able to discuss much about the tax investigation, which normally arises where the taxpayer is failing to declare or trying to evade and which evade taxing, which is illegal under our law. So the objective of a tax investigation is to establish whether there is a gross negligence and on the part of the taxpayer and whether there is a fraud of the part of the taxpayer. And we are saying it is the responsibility of the taxpayer to declare his incomes, full assessment for a given year of income. So the taxpayer should always compute and pay their taxes. The taxpayer should also compute and pay their taxes. That should be the same point, right? Correct. Just the same. If the tax returns are not submitted on the due dates, we are saying that the commission can issue a default assessment. The commissioner may rely on the following sources of information. One, we are talking about the commissioner, the information, he can be able to get it from the taxpayer making disclosure and confessions. Two, we can be getting it from the investigators from the Revenue Authority. Number three, the media can be able to give you such information about a certain client. Number four, other government institutions, the department that the taxpayer deals with, due to the withholding of the taxes. Number five, we are saying use or personal identification number. The use of the identification number will be able to tell us the accounts in which the taxpayer is able to hold, and how much that the accounts have in terms of the transaction they are doing. The other aspect which we have to be checking on is other business partners, customers, and suppliers, and that also that can be able to be accessed through the personal identification number. We have the employees and employers, friends, relatives, enemies, and spouse, and then also we can be able to get from the taxpayer lifestyle. Now, there is a circumstance that, what are some of the circumstances, because the examiner will be able to ask you such kind of a question. What might be some of the circumstances which may trigger the tax investigation? And one, it is just the failure, you can be able to put this clear, it is just the failure to file returns within the due dates. that one may be triggering the tax investigation. Number two, you can also talk about failure to pay taxes within the due dates. We can also talk about payment of taxes of different amounts, whose variance is so material. It might also trigger to tax investigation. The other thing that we can be able to discuss is what we have talked about, set up by the third parties. And then the other thing that we normally discuss is self-confession. Now, when I'm trying to explain much about the tax investigation because it's very interesting, you can be able to look on while you are trying to undertake the tax investigation, which are some of the methods we can be able to use. One, the taxpayer or the tax investigators might be using the incomplete records, which we have already done as a topic, so we are not going to be repeating it. Then number two, an investigator might be using the capital statement, which we should be handling right now. So in this case, when you look on the capital statement, you will be able to realize that we have to be checking on the capital statement is just the mostly used when investigating individual taxpayers who do not maintain proper accounting records but have balances of assets and liabilities. So some of the steps which we normally use when we are ascertaining all these, when we are using the capital statement. Number one, I can be able to say we need to be ascertaining our total assets of the taxpayer, both for the business and personal. That is one of the steps. We have to be grouping all the total assets, whether for business and yours as an individual. Number two, the other point which I might be giving out is that ascertain the total liabilities of the taxpayer, both for the business and personal. We have to be checking on that. And then later on, we have to be checking on the net assets, by deducting the total liabilities from the total assets for the year. We are going to be checking on that. Those are the net assets. When you take the total assets minus the total liabilities, you can see here is what we normally sometimes call it the capital, right? Because that is where we are saying the capital determined at the specific days is compared against the capital at the end of the subsequent period to determine the growth. And that should be the next point where we normally discuss about determining the growth in net assets by comparing the net assets of the given year with those of the previous year. We are just going to be checking on those things. These represent the reported profits over a given period. Then when you look on it, we are saying the capital can be increased by profit, investment income from dividend, interest, and capital gain. And also non-taxable income like inheritance, foreign investment income, etc. But it can be able to be reduced by the loss drawings for personal expenses. And also we are talking about the capital losses. But to put that in simpler terms, you normally discuss about adding back the disallowable expenses, things like depreciation, loss on sale of the assets. We have living expenses. So, and also the living expense can be also be called as private expenses. Then we are going to be listing the allowable expenses, things like interest paid and capital allowances. Then we can less non-taxable income, things like the gain on sale of assets, inheritance received, dowry payments, among other points to put in place. And I can see also those things are indicated on my notes here very well, which you can be able to use is a point to express your also to follow. Let me talk about following those steps in the computation of the taxable income of a certain taxpayer. So what I just want to do here is that I just want to do an illustrations and then later on I just want to inform you that it is an area in which the examiner is trying to do a lot of testing. He's testing a lot of questions from that end. And after the completion of this, then we can be able to do another question. But I will not be able to do a question which is similar to the other one. So in this case, I just want to start by doing on November 2020. And I think from this end, I will just be able to do only 2 questions. And then I give you a lot of assignments which you can be able to use for revision purposes. So November 2020, Rose will be able, I don't know whether she is able to read for us, but let me see if she arrived well. She can be able to inform us. So we are discussing about November 2020 question 4B. 4B. Very interesting area. Part of our syllabus here. So Anuarazo, someone to be able to read for me, please. Chomo, can you be able to read? Chomo?
Hello?
Yes.
Can you hear me?
Yes, yes.
Anita Warazo has been operating a sole proprietorship business since 1st January 2015. The following information was obtained from the books of the business for the past 5 years. Current account balance for the years 2015, 16, 17, 18, 19. Okay. Current account balance for 85 debit, 600 credit, 960 credit, 350 debit, 560 credit. Treasury bonds for 1,450. Sorry. Current account balance for 85,000 debit, 600,000 credit, 960,000 credit, 350,000 debit, 560,000 credit. Treasury bonds 1,450,000, 940,000, 740,000, 648,000, 760,000. Pickup costs 900,000, 900,000, 1,600,000, 1,600,000, and 1,600,000. Computer costs 150,000 for year 2015, 150, 2016, 200, 2017, 200, 2018, 200, 2019. Inventory 0, 2015, 170, 2016, 240, 2017.
Just proceed to your additional information, please.
Additional information. All non-current assets were stated at cost and where the fair value change was either due to additional assets acquired or disposed of. 2. Furniture and fittings whose cost was 100,000 was disposed of on 1st January 2017 for 68,000. 3. In the year 2016, the proprietor made drawings of 38,000. 4. Anita Warazo paid school fees for her children from business current account of 38,000 per annum for the year 2016 and 17. 5. A leasehold property included a property valued at 400,000 inherited from her late father. 6. In the year 2018, she paid insurance premium of 42,000 for her private residence. 7. She contributed to a fundraising in 2019 of 60,000 for supporting her church function. 8. The non-current assets qualified for capital deductions where applicable. 9. Leasehold property comprised a warehouse, cost 1 million, while the inherited property was a dwelling house. Required. Prepare a capital statement showing taxable income for the year 2016 to 2019. 2. Comment on the tax position of the years of income.
Thank you so much. I don't know whether the other students will be able to hear you, but I think we shall be. When we were looking on the computation of the capital statement, we have said the first thing or the first step that we are supposed to be working on, it is to ascertain the total assets of the taxpayer, both for business and for the personal, right? That is the first thing that we have to be doing, and that can only be determined when we are looking on the when we are computing the when we are computing what, let me see. When we are looking on the information provided here, we are supposed to be factoring two things. The first thing, we are going to be computing our total assets. Later on, we will be able to ascertain the total liabilities, and then from there we will be able to follow other steps. So when you go to the board, because this question is not that hard, these are the questions which you're supposed to be enjoying a lot. So in this case, we are saying the first step, let me just first write my title. We are doing the tax investigation. Just doing the tax investigation. Now, in this case, we are saying that the person who we are working on is called Anita Warazo. So examiner is discussing about doing the question for the respective months. The examiner is talking between 2016 to 2019. 2016 to 2019. I don't know why you are not able to see the board very well. Let me see what is the problem. So the question was asking about we do for 2016 to 2019 capital statements. So here just talk about the capital statement computation. The capital statement computation. Good. So in this case, remember we are dealing with different periods. And we have to be included because your question is talking about 2016 to 2019. I have also to include 2015 due to not to struggle when I'm calculating the net assets, not the net assets, but the growth in the net assets. So in this case, I just say, let me take from 2015, we have 2016, we have 2017, we have 2018, then we have the last one, I think, is 2019. Right? Those are the periods under the analysis. And you remember the shillings are limited to thousands. Things now a bit, the board is a bit clear. We are limiting our shillings to 1,000 there. Now, I have said the first thing that we have to be looking at, it is the total assets. Na nikiangalia swali yangu where it starts, their current assets balance given, some are in credit. When they are credit, it means they are liabilities. When they are debit, it means they are assets. So in this case, I start with the current accounts. When I start with the current account, I can see I just factor the debits only. To me, they are the only assets under that account. So the first one is 485. The second one doesn't have. The third one doesn't. Right. This is 350. And I think here we don't have. Now, when I look on the other aspect there, right, we are discussing about the treasury bills, which will be able to be analyzed later. We have pickup. Our pickup now, I can see we have at cost 900 here. They'll be given also for 2016 900. We have 1600, right? The other one is 1600 all through. And also here is 1600 like that. Then we have been talked about the computers at cost. Computers. In this case, we have been given 150 for the first 2 years. This is also 150. We have 200,000, 200,000. And also here, we have 200,000. Now from there, we go to the inventory, and 2015 we don't have. Now for the inventory, we look on the 2015 does not have. Yet it was being told is 170, right? The other one we have 240. 240, we have 280, then we have 376. 376. We also have trade receivables. Trade receivables, I can see we have 720 the first year. The second year we have 600. We have 560, right? We also have 700 and 840. Yeah, that is the trade receivables. When I look on the 10% mortgage loan, that should be a liability together with the trade payables and bank loan. We go to the leasehold property. Leasehold property. In this case, I can see the leasehold property, we have 1400 all through, and there is a point which talks about this, and but should be deducted later. 1400, 1400, 1400. Now, after the leasehold property, I can see we have the cash in hand. The cash in hand of ours, the first one we have 560, right? 840. Right. The other one I can see, what do we have? 540. We have 600. Then the last one, I can see we have 760. Now, the last thing I can see there, we have furniture and fittings, the second last. The furniture and fittings, I can see the first one given as 400 throughout for the first 2 years. So here you have 400, 400 here. The next one should be 300 throughout remaining periods. It looks like that. Then we have the personal saloon car. When I look on the saloon car, the first year we don't have. The second year is 480 all through. It looks like that. 480 throughout, right? Now, the thing that we are supposed to be getting down here, I don't know whether my space will be enough, but let me try. Let me use a different pen. I know that this is the pen that you like because you see what's all the data. We have the total assets here. We have the total assets. And these total assets of yours, you label them A, right? So what is the summation? You can just be able to use your calculator to do the summations. So in this case, we start with the 2015. We have 485. We have 485 plus 900 plus 150 plus 720 plus 1400 plus 560. And then the last one, we have 400, getting 4615. The first one, 4615. The second one, we have 900 plus 150 plus 170. We had 600 plus 1400 plus 840, right? We have 880. We are getting 4940. We have 1600. 200, 240, we have 560, we have 1400, right? 540 plus 780. 5320 here. Then we have 350 plus 1600 plus 200 plus 280 plus 2100 plus 900 plus 480. Here we are getting 5910. Then the last one will be 1800 plus 376. We had 840 plus 1400. We had 760 plus 780. We are getting 5956. Those are the sum of the answers which you are supposed to be getting there. Then from there, we just want to fix our total liabilities. And we are just going to be identifying from the data which we have left behind. We start with let me look on the data. We are going to be looking on the things that we were not able to capture. The first one should be the 10% loan, right? We talk about the 10% mortgage loan. The 10% mortgage loan, for the first 2 years, we don't have, right? But for the third year, we have something there, like 4,000 throughout. Here we also have 4,000. We also have a current account. I remember we were able to forget about it. The current account, the first year, is a debit account. So let us look on the creditors. We have 600, right? Here we have 600. We also have 960. We also have something like 560. I think you're able to check on that. Then we have payables, right? I can see we have some trade payables. When I look on the payables, we have 460. 460 is the first one. We have 640, right? We also have 800. We also have something like 560. And then the last one we have 720. Then the last one we talk about bank loans. Then when I look on the bank loan, the first one is 370. The second one we have 348. The third one we have 400 for the 2 years. Then the last one should be 380. 380. I think we don't have any other liabilities. I don't know whether my space will be enough. Now, let us take my total liabilities. So the total liabilities, right, which you can be able to label it B, it will be the first one. We are discussing about the total for the total liability. I can see this is 830 goods. This one I can see translates to 988 plus that. We are supposed to be getting 1588. The other one we are getting how much? Let me check it there. We are supposed to be getting 6160. Use your calculator well. The other one should be 4960. Then the last one should be equivalent to 5660. The next thing that we are supposed to be looking at is the net assets. We have talked about net assets. Our net asset, we said, take A minus B. A minus B now, right? The A is here, B is here. So what is the difference? The first one should be 4615 minus 830, getting that 785. That's 785. You also have to be taking 4940 minus 1588, getting that 352. The other one we are discussing about 5320 minus 6160, getting negative 840. 5910 minus 4960. I'm supposed to be getting 950. Then the last one should be 5956 minus 5660. I'm supposed to be getting negative 296. Negative 296 there. Getting negative is not a problem. So in this case, the next thing that I'm supposed to be getting here, it is a growth in net assets. This it means I'm supposed to be getting the net assets for the next year. I subtract the net assets for the previous year. In our case, we start from here, 3352 minus that 785. We are supposed to be getting negative 433. Now, hapa kunapaswa kuwa line namna hii, because that data is not going to be used again. So, we are also talking about negative 840. Should be negative 840 minus 3352, getting negative 4192. The other one should be 950 minus 840. Here we are getting 1790. Then the last one should be negative 296 minus 950, getting a negative of 1246. 1246 there. Now let us look on the additional information which is provided there. I I can see all the non-current assets were stated at cost and where the fair value changed was either due to the additional assets acquired or disposed of. No problem. We are being told in additional information too, the function fitting whose cost was 100,000 was disposed on 1 January for 68,000. We don't have any problem with that. We are being told in the year 2016, the proprietor made drawings of 38,000, right? We said we add back the disallowable expenses and one is the drawings. So we add, let us start with the drawings. So the drawings was equivalent to 38,000 for the year 2016. Right, we don't have any other data for the next period. The other thing that we are supposed to be factoring in there, we are being told annual Razo pays school fees for our children from the business current account of 138,000 per annum for the year 2016 and 2017. No problem with that. We had back that is a disallowable expense, school fees. Right, we are being told 138, and also here is 138. We don't have data for the next two. Now, the other thing that I can be able to see there, we are being told a leasehold property included a property valued at 400,000 inherited from a late father. No problem with that. In this case, we are supposed to be doing some deduction for that. So inheritance will be, we shall be able to deduct it later on. That one we have to deduct it, inheritance. Now, let me just leave it for now. We have been told in note number 6, in the year 2018, she paid insurance premium of 42,000 for a private residence. You know that is a disallowable expense. So insurance paid, right? Insurance paid for that period was amounting to how much? 42,000. Now that 42,000 should be carrying out for the year 2018, I think. Yes, 42,000 here. Then the next thing that we have to be checking on, we are being told that she contributed a fundraising in 2019 of 60,000 for supporting a church function. So in that case, we can talk about deductions. So when we want to less here, we less fundraising. A fundraising, which was able to amount to 60,000 in the year 2019. We can talk about, that is a donation to charitable organization, amounting to, I think it is 60,000 here. Then the last thing that I have to be looking at is inheritance, which I was able to kuruka mahali. Our inheritance is how much? So in this case, when you look on the inheritance put in place, tumeambiwa for 2016 to 2019, Ali was amounting to 400,000. Right, 400,000, and that is where unaona Kenya tunashinda tukipigana. There was a lot of information regarding the inheritance yenye ilikuwa imeletwa na some politicians, right? There is no inheritance which we are supposed to be paying any taxes, and that is why we are saying it should be deducted. When you look on it, we say there any inheritable information, that is the thing that was much recognized in non-taxable income, and that law was passed in 1992. Now, the other aspect that we have to be taking on and should be worked for, it is the capital allowances. This is the capital allowances. Nikiangalia ile swali yenye tumepewa pale, there are some of the capital allowances which we are supposed to be computing for, and you will be able to allow me clear the first area. So that you can be able to compute the capital allowance. Let me just clear here for the computation of your capital allowances now. And the capital allowances are the ones which already, because we are doing for 2016 to 2019, don't ask me about the computation for the 2015. Remember, the 2015 is best used for the computation of the growth in the net assets. And then kutoka hapo, you normally shift your gears to what the question is asking about. Now, in this case, when I look on the asset provided by the examiner there, we start with the pickup, which is an allowable. These are the capital allowances are capital allowable expenses, which were yet to be deducted. So in this case, we can be able to deduct them. So the pickup, when you look on the capital allowance, it is normally qualify for class 1. The rate is 25%. So it will be 25% of the cost provided there. So for 2016, the pickup were amounted to, the total cost was 900,000. So I just take 900 times 0.25. What I'm supposed to be putting here is 225, right? Then the other one will be 0.25 times. I can see throughout is 1600, which is simple for me. I just need to put here 400, 400, then we have 400 there. Good. Now, after the pickup, the other asset which I can be able to see, we have computers. We have computers at the end of the day. The rate also is 25%. So in this case, I just need to take 25% of the cost and you start from 2016. So 0.25 times 150, we are getting that 7.5. The other one will be, when I look on the computers, the next is 200. So 200 of 0.25, we are getting 50. So here's 50, here's 50, here's 50. Now, after the computers, we can also look on the leasehold property, which I can see it somewhere. So the leasehold property qualify for WTA class 2. The leasehold property at the rate of 10%. So it will be 10% of what? So in this case, I can see 1400, getting 140 throughout. 140, 140. Good. The other thing I can see down there, it is the furnitures and fittings. So the furnitures and fitting at the rate of 10%. So 10% of what? Furnitures and fitting, I can see it is 40. And then the others are 30, 30, 30. We have 40. Here we have 30, 30. And also we have 30 there. Then the last thing that we have to be computing, it is our saloon car. Our saloon car now. So the rate will be, as usual, at 25%. So it will be 25% of 480. 0.25 times 480. We are getting 120 here. 120, 120, 120. So how much it is? These are your capital allowances now, which are allowable expenses. So the first one should be how much? The first one will be 225, that's 7.5 plus 180 plus 120, which equates to 562.5. The other one will be 450 plus 170 plus 120, getting 740. We have 450 plus 140 plus 150. We have 740 again. The last one will be 450 plus 170 plus 120. I think it is also the same, 740 here. So come down here and you deduct your capital allowance. You say the underworking one. So in this case, it should be 562.5. We subtract there. We have 740. The other one is 740, 740. So in this case, let us look how much this person is supposed to be paying. And then you are going to be starting from the growth in net assets. So don't start from up there where we have the net asset. That is why I was able to draw that line, right? So in this case, let me start with the last one. So we have negative 1246 minus 60 minus 400 minus 740. Here we are getting a loss of negative 2446. The other one will be 1790 plus 42, right? Minus 1140. We are getting 692 here. Now, the other one will be negative 4192 plus 138 minus 1140. We are getting negative 5194. Then the other one will be negative 433 plus 38 plus 138, right? Minus 962.5, getting negative 1219.5. 1219.5. In this case, because the question was asking you to do some, there is a requirement there where the examiner was asking us to comment on the tax position of Anwarazo of each of the years of the income. So in this case, once you get your data in that manner, you're supposed to be looking on, you cannot be able to tax the negative figures. And that is the fact. So the only year which we are going to be taxing is for the year 2018. And you can say, Anita, sorry, let me say this, part 2, Anita Warazo, right? Anita Warazo will be taxed on the income, will be taxed on the income for the year 2018 only. Since the other years reported a net loss. Reported net losses. Any question?
I have a question. Hello?
Yes.
So my first question is, I'll take you to donations. Why are we lessing donations?
I can't hear you. So you kombali leo kwa nini?
I'm asking, why did we less donations instead of adding back?
Why did we?
Less donation.
Donations.
Yes.
I remember when you were doing the donation to the charitable organization should be the allowable expense. Donations to the charitable organizations.
No.
Any other form of donation is the disallowable expense.
So we assume church is a charitable organization.
Sure it is.
Okay. Number 2. About the pick them anywhere.
Sorry?
Treasury bonds. Why have we not picked them as our assets?
The treasury bonds?
Yes.
When you look on the aspect of the treasury bonds in other areas, this is a loan which you have already given to the government, and it is a form of a loan, by the way, which is given to the government, and therefore it is not claimed immediately, and therefore it is basically assumed as not part, because already those are the investments. We talk about the investment appraisals from the profit in which the business is going to be generating. Basically is going to be used as the investment appraisal, and therefore when you are doing the tax investigation in some instances, and even from the notes of the tax investigations does not include the aspects of the bonds when you are calculating the tax investigation. It is not captured, and it is because it is not considered as part of our assets. You have just given a loan in terms of money for the purpose of gaining some interest, and you are just going to be getting your items back. So that is basically taken. But remember, these are the assets. These are the assets which you can be able to claim at the end of the day, right? These are the assets. But zile pesa already mimi nimepeana from my with the money which I've already given out, they are not factored. We normally look on the assets which you have purchased. The assets which you have purchased, but not the money that you have been given out. You have already given out. But the money that you are being given by the financial institution is being factored. And that is why here we have a bank loan. That is why here we have a bank loan.
Okay, and the last one. if I look at year 2019, my total asset was 5956, and my total liabilities was 5660. So I should have net assets, a positive net assets.
A minus B.
Yes.
How much was it? Should be a positive 296, right?
Yes.
Okay. So let me just make a clarification for that. So it means that when I'm calculating the growth in net assets, you're supposed to be taking what minus what? Minus 296 minus 950, right? Okay. Get is negative, sorry, it should be negative 654. Have you gotten that?
No.
What have you gotten?
I've gotten 936. I'm taking 950 minus 296.
If you take 296 minus 950, see, already here you took that 352 minus that 785, ukapata hii. Hii ukatoa, hii ukapata hii. Hii ukatoa, hii ukapata hii. Then if you toe kwa hii, utapata ngapi? Utapata negative 654.
Okay, thanks. Yes, I was speaking the first year less the second year.
No.
Okay.
Then minus 460 minus 740. We are getting something equivalent to 1854. That is okay. Thank you for the correction. 18. So even my comment in part 2 is okay. So that does not have any problem. So because I will not be able to repeat the same, because the questions are basically said the way I have looked at this one, I will be able to give you an assignment for this before I do a different one. So assignments should be, right? The assignment which you factor in this scenario should be November 2016 question 2A. November 2016 question number 2A. November 2016 question 2A. It is a similar question, very similar to what we have done. Is that okay?
Yes.
Very good. I just want to do a different question. And also we have another question regarding to this, which you can go and try. November 2017 question 4B. November 2017 question 4B. You can also go and try that one. You can go and try that one. So I just want to do the last question, which was tested the other day, regarding to this, and then you will be in a position, we shall be able to shift to another form of taxation. Good. So let us look at December 2021. December 2021 here. December 2021, we look on the last question here. Linda Obari. Rose, can you be able to read, please?
Linda Obari has been operating a retail business since year 2016. She has not been making a books of account over the years and is therefore under investigation by the Revenue Authority. The following details are obtained from her business records. Kindly scroll down. Kindly scroll down. Additional information number one, we have personal expenses for the year 31st December 2017, 31st December 2018, 2019, and 2020. We have repairs of house, 172,000. New for 2018, 180,000, 2019, new 2020. House manager salary, 259,000, 302,000 for 2018, 344,000, 2019. 358,000 2020. Cash withdrawn from bank in 2017, we have 182,000, 220,000 2018, 300,000 2019. We have 340,000 2020. We have school fees, 228,000 2017, meal 2018, meal 2019, meal 2020. House expenses, 163,000 for 2017, 31,600 for 2018, 356,000 2019, 302,000 2020. Number two, non-business income. We have rental income, 162,000 2017, 166, 560,000 2018, 120,000 2019, 218,000 2020. Interest from bank deposits, 2,750 2017, 14,970 2018, 20,000 2019, 22,000 for the year 2020. Additional information number three, for the year ended at 31st December 2017, salaries paid to the various husband for the business amounted to 312,000 shillings, and this was increased every year by 15%. Additional information number four, she received 360,000 shillings in cash as inheritance for the year 2019 from her late father. Required one, completing of various works, taxable income or loss for the year ended at 1st December 2017 to 2020. Two, describe the factors that are the authority considers in ascertaining the adequacy of living expenses and above the investigation.
Thank you so much. I can see we are all together today, challenged, because I think we are some I cannot be able to hear, mwingine wako kelele and so on. But let me just tell you how this examiner was able to give you an easy job. When you look on the total assets calculated by the examiner up there, you can see the total assets of 2648,670. When you subtract the liabilities, we don't have the liabilities because the bank loan for 2016 and creditors, we don't have, it is zero. So the capital becomes your net assets. Then you can see we have, even if you look on 2017, you take 57,940 minus the difference on the bank loan and creditors, which are total liabilities, you should be getting 28,44,340. So in this case, I don't just be able to copy all this, but I can just go straight in my question and start with the net asset rather than starting doing or writing all the that data, whereas the information provided is enough to give me the total net assets. Now, in this case, I just need to be able to look on, I just look on December 2017. The title for the question should be, remember the person we are dealing is Linda Obari. So the question requires us to do for the computation for 2017 to 2020. Tax investigation. Right. It is normally called, we have talked about capital. Let me just call it capital statement computation. Oops. Now, in this case, we are going to be starting with 2016, 2017, 2018. We have talked about 2019. Then we have 2020 up there. It looks like that. So we start with the net assets. Our net asset is given by this examiner. For 2016, we have 2648. 2648, 670. 2017, I can see we have 2844. 2844, 340. 2018, we have 3254. That 254, 350. Then the 2019, we have that 239. Thousands. Then the last one should be 3263. 500. Sindio? Now, from there, we calculate the growth in net assets. The growth in net assets. And in this case, remember, we are going to be looking on it for 2016 or for 2017 onwards. So we just look for the difference. So the first one will be 2844, 340 minus 2648, 670, getting 195, 195, 670. The other one will be 3254, 350 minus 2844, 340, getting 410, 010. The other one will be 239,000 minus 3254, 350. Here you are getting negative 15,350. The last one will be 3263, 500 minus 3239,000. And I can see we are getting 24,500. 24,500. Sindio? Now, in this case, we said, from there now I can go to the additional information, and I will start by adding back the personal expenses. Add personal expenses. Well, because wewe unafanya exam, hizo personal expenses unaeka moja moja, right? So that you can be having more entries. Because mimi sifanye exam here, na nishakueleza venye unapaswa kufanya. So let me just combine them. So I just need to take 172 plus 259 plus 192, right? Plus 228, right? Plus 163. Hapa, tapata 1014,000. Is it for which year? It's 2017 years. 1014,000. Right? The other one will be, should it be 1014? I think it should be something to that. Yes, 1014,000. The second one will be 302,000. 302,000 plus 220,000 plus 331,600. 331,600. This one we are getting 853. 20 for 2019, and for 2019 we have 180 plus 344. We had 300. You also need to add 356. Getting 1180,000. Then the last one we have 358 plus 340. We also had 382. Hapa napata 1080,000. 1080,000 like that. But nimekuambia because you are doing exam, unaeka kila kama ni repair of the house peke yake, house manager peke yake, cash with the draw namna hiyo. Because the exam of yours will be marked based on the entries. Now, when I look on number 3, additional number 3, because number 2 I'm supposed just to be taking the interest from the bank deposits. But before I go there, I can see note number 3 we have been told. For the year ended at 4 December 2017, salaries paid to Linda Obari's husband. Salary to husband is a disallowable expense. Salary to husband. So how much is it? The disallowable expense was amounting to 312,000, but it was increasing by 15% each year. So it starts from here, 312,000. So 312,000, you multiply by 1.15, right? You get 358, 800. I multiply by 1.15, getting 412. 412, 620. And then I also equals, we get 474. 474, 513. That is the answer for that. Then now I can be able to factor my deductions. So we less one. Let us look on inheritance given. In the question, we have the inheritance. She received a 360,000 in cash as inheritance in the year 2018, right? 360,000. That was the inheritance from the late father, right? That was the inheritance. Is it 2018? No, should be 2019. 360,000. Now, when I look on the other thing is the interest on loan, you know very well, we are being told the interest on bank deposits, right? The interest on bank deposits, interest on the bank deposits, those are non-taxable income. The first one is 2780, right? Taking them out, is this 2750? I have a lot of errors there. 2750. The other one we have 14,970. Yeah. The next one we have 20,000. The last thing, right? 20,000. The other thing will be 22. So what we are supposed now to be getting is the total taxable income for the respective years. Total taxable income, total taxable income, total taxable income. Total taxable income. Someone might be asking me the rental income. Now, ukiweka hapo weke tu residential utaiweka dash. Right? So the first one is 195,670 plus 1014,000 plus 312,000 minus 2750. The first one we are getting 1518, 920. The second one will be 410, 010, plus 853, 600, plus 358, 800, minus 14,970. We are getting 16, 07, 440. The other one we have negative 15,350, plus 11,000, 80,000, plus 412, 620, plus 360,000, is it plus, sorry, negative 360,000 minus 20,000. We are getting 1197, 270. Yeah, 24,500 plus 1080, 1080,000 plus 4474, 513 minus 22,000. We are getting 1557, 013, 1557, 013. The other thing now, which I can be able to assist you to come up with a lot of notes or do your analysis, is part 2, where the examiner is asking you about describe the factor the Revenue Authority considered in ascertaining the adequacy of the living expenses under the bank duty investigations. One, we might be looking things like the cost of living, right? Wakati unafanya analysis ya uangalie this. We have marital status. Marital status. Number 3, we can also be able to look at and I think it should be like that. Number 3, we can be able to look on the lifestyle of the taxpayer. Yeah. The other thing that you might be looking at, it is inflation. Then the last point, which you can be able to do your analysis, it is the number of family members. Family members. You can be able to go and do your analysis in answering those points. But the examiner go and talk about direct. But in other questions, the examiner might be asking you to explain. I think that is very clear and very well sorted. The next thing which I'm supposed to be looking at right now, right? Let me check here. Which other taxation I'm supposed to be looking at right now? I can see we have taxation of a member club. And when I look about the taxation of a member club, we are saying that in simpler terms, a member club is just where members, it is normally referred to the association of persons who come together, right? These are just the people who are coming together with a common objective, and that is what it is normally called. It is normally called a members club. And in this case, we are saying that a body of persons that carries on a members club shall be deemed to be carrying on a business and gross receipts on revenue accounts, including entrance fees, subscription shall be deemed to be income from the business. And in this case, I can be able to expound on that and say, the income of a member club is basically subjected to a tax at a corporation tax rate of 30%, right? However, if the member contribution is more than 75%, as you can be able to see it there, if it is more than 75% of the total income, such contribution from the members will be exempted from the taxation. That is why you see that point I'm saying. The member clubs are taxable if less than 75% of the gross receipts are from the members. I have to be looking on that. So if, for example, we find that the taxation is more than 75% for the members' contribution, what are we supposed to be doing? We are saying that the only taxable income shall be the income derived from the third parties. The income which you are going to be deriving from the third party should be always the taxable income of a member club. So let us just look on illustration regarding to this, and we look on how we can be able to tax those people. So when I look on my illustration here, there is a question on November 2016 sitting regarding to member clubs. Let me see here. November 2016. It should be question 2B. You can see here that tuko na swali ya tax investigation. You can just go and do. Question 2B there for Michezo Sporting Member Club, right? That one I'll be able to read. Those who are party vizuri. Now, in this case, we are being told here that the following information was extracted from the books of Michezo Sporting Member Club for the year ended at December 2015. So the club's manager did not submit income tax return, as he argued that the club was exempted from taxation. He has consulted you for the professional advice. Additional information there. The club received gross income during the year ended at December 2015, amounted to 35 million, which was analyzed as follows. We are being given the entrance, members subscription, interest on less subscription, interest income, dividend income, royalties, rent income, and then we have the gain on property transfers. Number 2, we have been told operating expenses amounted to 60,000. Then we have number 3, the interest and dividend income was stated as a gross of tax required. We have been told here, advise the club's manager on the circumstances under which member clubs are taxed in your country. That is number 1. Number 2, we have been told assess whether Michezo Sporting Member Club is subject to taxation for the year ended at December 2015 and the applicable tax liability. We are just given 8 marks there. But the first thing that I'm supposed to be looking at, it is the computation now. It is the explanation, sorry, regarding on how the member club should be taxed in our country. So here, remember we are doing the taxation of a member club, right? The question we are doing is November 2016, question number 2A. Question 2A there. And in this case, now we are saying that let's just look on how we should be taxing the member club. Then I can be able to say a member club shall be taxed. A member club shall be taxed. A member club shall be taxed on all its income. On all its income, both from members and third parties, both from members and third parties, right? And let the members' contribution is more than 75%. It's more than 75% of the total income. Of the total income, right? Where such income from members will be tax exempt. Where such income from members will be tax what? Tax exempt. Tax exempt like that. Now, I just want to look on the first thing, which I'm supposed to be working on part 2. It is the computation of 75%. So the workings which I'm going to be having here should be 75% test. And this should always be based on the income from members. The income from members. The income from members is what we are going to be factoring in. Now, in this case, let me look on the total shillings here, and I will be able to limit them to thousands. When I look on my question, we are discussing about I have already quoted there the 10% test, but in this case, 75%, sorry. So let me look on the income from members. The first one will be, the first income from members should be which one? We are talking about entrance fees. Our entrance fees as per the question we are being given, 47.70. Number 2, we are looking on the member subscription. Member subscription is how much? It is 15,900. 15,900. The other income from the members, it is interest on late subscription. Interest on the late subscription, we are being given 795. What is the total here? Total income being given from members. How much is this one? How much is that one? So in this case, when I look on that total, that is the income from members, 4770 plus 15,900 plus 795. You are getting 21,475. 21,475. 465, sorry. 465. 465. 21,465. You in Itangwa, the income from members. The income from members. To get to a 75% test, you normally take the income from members, we divide by the total income, alafu na multiply by 100%. Now the income from members tumepata 21,465. The total income yenye nimepewa pale kwa swali is that 5 million. That 5,000 in our case. Then you multiply by 100%. So in this case, how much are we getting here? So this question becomes very simple. 21,465 divided by that 5,000. We are getting 61%. This is less than 75%. It should be subjected for taxation. So ishafika hapo wewe unakuja unaandika heading yako. Tumesema tunafanyia michezo. Anaitwa michezo sporting member club. Right? The sporting members club. 2015 taxable income computation. Taxable income computation. Tunaanzia hapo. So in this case, what are we supposed to be put into consideration? Kwanza weka Kenya shillings hapo in thousands of shillings. Alafu tunaanza na income from members. The income from members tumesema ni 21,465 with less operating expenses. The other operating expenses per additional information 2, right? We are being told the operating expenses were amounted to 6360. So what is the difference there? So 21,465 minus 6360. We are getting 15,105. 15,105. Now, let me analyze other incomes. This is the net income from members. Those are the net income from members. Let me analyze other incomes. And the other income, we are going to be starting with what? The other income is very simple. I will be able to start with the interest income, which we are being told it is a fixed deposits. Interest income, it qualifies. Interest income, it is an unqualifying income. So in this case, we are just putting here 2544. The other thing which I can be able to see, they are dividends income. Unaweza mwambia tu, they are qualifying. The withholding tax at the rate of 5% is final. Unaweka tu dash. Then the other thing will be royalties, right? The royalties are 5%, which is not final. Our royalties amounts to 1908. The next thing which we are supposed to be put into consideration here, we are talking about rental income. Unaweza weka tu assumption is a residential. Ikishaweka residential naweka dash at the end. Then the last thing will be the gain on property transfers is not part of the other income of the business. Now, let us calculate the total taxable income. The total taxable income will be how much? 15,105 plus 2544 plus 1908. Getting 19,557. 19,557. Now, in this case, I'm just going straight to calculate the tax liability. Just like any other business, 30%. We multiply by 19,557, itakuwa ngapi? Times 0.3. Unapata 58,67.1. Then you less your reliefs. Withholding tax relief. Right? The withholding tax relief, we have only two. Now, one, it is the relief for these interests. There is an interest income. The first one is our interest income, the 15% of the gross amount. Our gross amount was amounted to 2544. The other one is for royalties. We should be 5% of the 1908. So 0.15 times 2544, we are getting 381.6. The other one should be 0.05 times 1908, and we are getting 95.4. What is the total tax payable? The tax payable we have plus 381.6. Then we take 5867.1 minus my answer. We are getting 5390.1. 5390.1. 5390.1. Any question? Any question? Any question here? If we don't have any question, let us proceed to something different.
Can you hear me?
Yes.
No, let me take you back to the other question you are doing for Anita. My question is, why did we take the personal car into the business?
Why did we?
Why did we calculate withholding wear and tear on the personal saloon car?
There was a personal saloon car.
Yes.
That one I can just look for it and then come back.
Okay.
No problem. Just look at it and we'll come back if there is any problem with that. Now, I just want to look on other form of taxation, and that is the taxation of contracts. And these ones we are saying they are the contracts which take a period longer than 1 year of income to complete. And the incomes and expenses may be associated with several years. So that is why we are saying in each year, the taxpayer should determine the taxable profit using either of the following methods. One, the use of the value of work certified, which we normally do very much, and that is what is required. Then number two, we have the percentage of completion method. But let us look on the value of work certified, and we have said the work certified in a given year of income is considered the revenue of the sales, which is compared against the expense incurred to determine the profits. So that is why we have said the provisions of the Income Tax Act 15 and 16 says that the allowable and unallowable expenses apply accordingly when we are doing these questions. When you look on the percentage of completion method, we are saying in this method, the revenue and profits are recognized as the project and the contract progresses. That is on the basis of the proportion of the completion. And you can see we look on the cost divided by the estimated total cost. And this one is what we shall be doing right now. So let me just look for illustration here. There is an illustration for this. Let me just go to 2019 question 4C. 2019 here. It should be November. It should be question 4C. When I look on this question of Benita Contractors, we have been told Benita Contractors Limited operates in the construction industry. And we are saying on November 2016, the company won a tender for the construction of two projects, a hospital and an office complex. And we are being told the construction of the project commenced on 1st January 2017. The following details relate to the two projects for the year ended at 1st December 2018. So we have already been given the hospital project together with the office complex. The balances at the beginning of the year are given, together with the transactions which were undertaken during the year there. But when we go to the additional information, the examiner tries to explain to us and says that the consultancy fees for the hospital projects include 40,000 prepaid for the year 2019. When we are going to be doing and factoring the consultancy fee, you will be telling me whether the prepayments are expenses or not. Number two, wear-and-tear allowances on plant was provided at the rate of 12.5% per annum. Number three, we are being told that the direct expenses accrued and not reflected above were as follows. So you can see we are being given some expense for the office and hospital down there. Then with the requirement, we have been told a schedule showing the taxable profit and the tax payable, if any, by Benita Contractors Limited as of that 1st December 2018. Examiner is giving you 10 marks there. So what am I supposed to be doing here to get my total taxable income? It is very simple. You're supposed to be looking on the value of the work certified during the year. Then we are going to be comparing it with the cost of work certified during the year. The difference should be our solution. The difference will be our solution. Let us work on that. Let us be very keen on this because I'm going to be giving you an assignment from it. I just do one question, the other one you do for me. So in this case, when you look on the solution which is being required for this question, the solution for the question is it looks like this. We are discussing about taxation of contracts. Taxation of contracts. We are doing a very familiar question, November 2018, question 4C. Right, 2019 question 4C. Now, from that question, we are also saying, because we have already won 2 contracts, tunazifanya zote concurrent. So let me just write my title. We are talking about Benita Contractors. Benita Contractors Limited. The period is 2018 taxable income computation. Taxable income computation. That is what we are required. Then remember, you are doing for two contracts. We have for the hospital, and then we have office complex. So hapa lazima tuweke 2 columns for Kenya shillings. Right. I hope it will share. Then here also we do Kenya shillings. Kenya shillings like that. Right. That is how your format looks like. So in this case, we are going to be starting our balances brought down. The balances at the beginning of the year. That is what we are going to be starting with. That is what is going to be starting our question. Just give me 1 minute. 1 minute, 1 minute. So let us continue. So let us start with the balances at the beginning. So balances at the beginning as per the question. I think you have opened the question from your end so that you can be able to follow it. So the balance at the beginning, we are going to be starting by looking on the cumulative values at the beginning of the year. And in this case, my cumulative balances are given on, they given? Someone to show me where they? Good. To determine the value of work certified for the year, this is what you're going to be doing. You normally take the cumulative value at the end of the year. Cumulative value is at 31st mwezi wa 12. When I look on the question properly, in the transactions which took during the year, we have been told the cumulative value of the work certified is at that 1st December 2018. We are being given 700,000 here. And we have 864 office complex. Then we less cumulative value at start. Let me use those terms. So the cumulative values at the start, when I look on the beginning balances, we are being told the value, right? The value should be the value of work certified to date. That is the beginning balances. For hospital, you are being given 200,000. For the other person is given 160,000. Let us get the difference. The difference will be able to resemble what? So the difference for these will be resembling the value of work certified during for the year. The value of the work certified, and it is normally labeled as A, right? So the first one will be 500,000 here. On the other side, we are discussing about 700,000. 700,000. From there, let us now look on the total cost incurred. The total cost now. Total cost. And I will start with the materials. I analyze the materials zote ziishe, and another expense and so on. So let me start with the materials. There is an information regarding the material. And the first thing that we have been checking in, it is that we are being given the materials at the beginning of the year. For the hospital, it is 6,000. For the other person, it is 4,000 here. Right? Next, we have to be looking at, we are going to be adding some materials or certain information from the transaction which took place during the year. We have been to the material delivered to site. There are some additions which have been made during the year from the store and from the supplier, right? So let us talk about the materials from store. The other one is from, we are being told we have our supplier. Hapa alitupea 10,000. Hapa akatupea 100,000 worth of materials. On the other end, alitupea ngapi? 14 and 128,000. Should be 14 and 128,000. So here's 14,000. Here's 128,000. This means materials will increase because already materials nilifungua mwaka nazo 6,000, 4,000. Materials zenye nilitoa store nika increase to the site. Tukaongeza 10, supplier akatuletea za 128. We have more materials for the hospital amounted to 116. Now we also have certain information. Where tafuta mahali popote kuna materials, I can see there are some of the materials which were transferred out. We subtract here because the materials zetu zilipungua. Materials transferred. The material which were transferred out were amounting here 10,000. On the other side, we are being given the materials which were transferred 17,000. Right, 17,000 there. You can see they are nothing much. Let me look whether we have the material, any other material. Yes, we are being told we have material sales. And when I look on our material sales, hapa hakuna material tuliuza. But the other side tuliuza. Ukiuza umepunguza 22,000. Right? 22,000 there. Inamaanisha umepunguza materials, your materials. Do we have any other material? Let us look on the balances carried down for material. Yes, we are being given down there. The materials on site, the balance brought down were 40 and 50. Let us subtract our closing, the closing stock. Upper ni 50, 40 and 50. 40, 50,000. 40, 50. I think it is like that. Good. So let us get our totals. We just need to know the materials which were used during the year. So the first three is 116,000 minus 10, 50,000. Here we get 66,000. I write them here. On the other side, I can see we have 18, 17, that is 129,000 minus 72,000. And I can see we are getting 57,000 down the line. Let us go to something else. Let me go back up there. I can see we have accrued salaries and wages at the beginning of the period. So the salaries and wages, we just need to work them straight. Salaries and wages. So the salaries and wages at the beginning, because they are accruals, unaachananga nayo kwanza unaenda kwa transaction during the year. Naona kwa mwaka, I incurred 120,000. So if there is an accrual, we deduct the balances at the beginning. So I just need to take 120. The balance at the beginning for hospital was 1,500. That is 1.5, is it? Should be 1.5. Then we add the balance at the end for these salaries. Na ziko huko chini kabisa, given as 1,000. Given as 1,000, which in my case here, I can write 1. So I just say 120 minus 1.5 plus 1, and we are getting 119,500. You naeka tu hapa straight away. Nimekuonyesha example, so I can do the other one without writing. So naangalia the salaries and wages on the other side was 180 minus the accrual at the beginning, right? Accrual at the beginning was 1.2 plus the balances at the end, which are given as 2. So the other side is 180,800. Now, let us continue by looking on our balances at the beginning. There is a plan which I can be able to see there, discussing about the written down value for the material. But during the year, there is a plan which we purchased. So in this case, we don't deduct the plan cost. We normally deduct the WTA for that plan. So for the hospital, remember hakuna kitu tuliadd. And because the plan is not well elaborated, remember the rates. Whether it is a heavy moving. So in this case, if they talk about the plan, give us the capital allowances at the rate of 10%, then you multiply by the cost. Hapa kwa hospital, hakuna kitu tuliadd. You can talk about 190 plus 0, which we did not add anything on the side of the hospital during the year. And this translates to 19,000, right? When you go on the other side, you will be able to know that you will be able to take 10%, you multiply by, you open your brackets. So the plan on the other side were how much? 150,000. 150,000. Nikiangalia the transaction, we were able to add some plans worth 120. So how much is this? 270 times 0.1, getting 27,000. Getting 27,000. Now, let us move on to something else. We have dealt with the plans. The cost of work done will be done later. The value of the work certified tumemalizana. Nikuja kwa transaction during the year. Material delivered to the site tumemalizana na from the store, from the supplier tumemaliza. Tumemalizana plant purchased at costs. Huyo tumemalizana kabisa. But we have subcontractors fee, right? Subcontractors fee. I can see the subcontractors fee ilikuwa tu ina affect The other side, 18,000. Right? Here we have talked about 18,000 on the other end. From the subcontractors, we look only for the allowable expense. We have consultancy fee. Consultancy fee. So another consultancy fee, we are being given what? Nikiangalia consultancy tumepewa 30 na 29. But examiner alituambia out of this consultancy fee, kuna 40,000 which was a prepayment. Sindio? And you know a prepayment is not an expense. So I just take 30,000. 30,000 minus 40. So this translates 30,000 minus 40. This comes to 29,960. On the other side, I can see is how much? Consultant's fee 29,000 minus 40, getting 28,960. 28,960. The other thing is ama ilikuwa imesemekana aje, wacha nione vizuri. We are being told the consultancy fee for the hospital project is only for the hospital. Sorry for that. It should be for the hospital. So in 29,000. I'm sorry for that. Then after the consultancy fee, we go to inspection fee. Right? Inspection fee. So the inspection fee on the side of the hospital, I can see we have 10 and 5,000. And here we have 5,000. The next one, after the inspection, we have salaries and wages. Salaries and wages, which we dealt with. Now we go to the head office expenses, right? Under the head office expenses, we have what? 2,000 on the other end. The 2,000, yes. The head office expenses should be 2,000. Correct. 2,000 here. Yeah. After the head office expenses, we can go to the materials, all those materials we dealt with, the planned lease charges, the allowable expenses. The planned lease charges amounted to 400 and 500. 400 here is 500. On the other side, we also need to be looking on the direct expenses. Ziko na story zake, the direct expenses. So under the direct expenses, we are being told here that during the year, we incurred 3,000 and 2,000, but additional 3, we are being given information which were accrued during the year. So for the hospital, we'll be looking like what? 3,000 minus 200 plus 1,000, right? That translates to how much? Is it 900? 3,200 should be how much? Let me check. 3,000. This should be 3,000, sorry. 3,000 minus 200 plus 1,000. Here we are getting that 800. The other person, right, should be the direct expenses. We have 2,000. We don't have the closing, but plus 400 comes to 2,400. 2,400. This unit tukiwa na any other cost. There is no any other cost. So let me get the total cost first. So let me first get the total cost. Usijali na space yangu. So here let us look on the total cost. So the total cost will be 66,000 plus 119,500 plus 19,000, right? Plus 29,960. Yeah, plus 10,000 plus 4,200. I can see we are getting 248,660. 248,660. Now, the other one we have 57,000 plus 180, 800, right? Plus 27,000 plus 18,000 plus 29,000 plus 7,000 plus 2,900. We are getting 321,700. 321,700. That is what you have already gotten. Those are your total costs. But since it's not the cost of work certified, and that is why we said we have another method which is mostly applicable when you are doing the contract, which is normally called the percentage of completion method. So in order to do with that to determine the cost of work certified, let us have a small working. Let us have a small working here. I just need to go in a small working up there. So in this case, to get our workings, right? Let us remind ourselves about this formula. Let us do this out with this formula here. So we say to get the work of the cost of work certified during the year, or the cost of work certified, what we need to do, right? One, to get the total value, we normally take the value of work certified, plus we have the value of work uncertified. You take the value of work certified with the value of work uncertified. That is how you are going to be getting the total value. After that, let me just start with the hospital. And when I look on the hospital, the value of work certified is given in the question. Let me read for you, right? The value of work certified is given in the question. We are able to get that value as 500,000, sorry. So 500, and then we look on the value of work, the other value of work uncertified. It is given in the question up there for the transaction during the year before the balance carried down for material and accrual wages for 30,000. So in this case, I just take 500,000 plus 30,000. This gives you 530,000. 530,000. Now, from that aspect, let us look on the cost of work certified for the hospital. The cost of work certified in this scenario, I just need to take 500,000, which is the value of the work certified. You divide by the total. 500,000, you divide by the total, which is 530. Then you multiply by the total costs, 248,660. How much is that? 500,000, which is the value of the work certified. You divide by the total value, 500 divided by 530. Then you multiply by 248,660. Hapa napata Kenya shillings 234,585. Right? Let us go to office complex. The office complex also I do the same. When I look on the value of the work certified is 700,000. The other one, which is uncertified, is given in the question down there, is 42,000. So this translates to 742,000. To get the cost of work certified, I just need to take 700,000. I divide by 742,000. I multiply by 321,700. Ask yourself how much it is. Divide by 742. I multiply by 321,700. Now I'm getting 303,491. So the cost of work certified here which is your B now, will be the first one we have talked about 234,585, right? The other one will be 303,491. 303,491. Now, in that case, you just need to be determining the total income, the taxable income, total taxable income, by taking your A minus B. By taking your A minus B. So your A is 500,000. Let me start with the second one, which is the 700,000 because it's already in my keyboard. 700,000 minus my answer, getting 396,509. The other person here is getting how much? 500,000 minus 234,585. You can see you are getting 265, 415. 415. That is how you do the question. That is how you do these questions of contract. So you just want to give out an assignment which you are going to be approaching the same way. Usijali, I'm getting time now from now henceforth for the niwashughulikie because of you know how the situations have been. Now, in this case, the assignment for this should be December 2022 question 4B. Najua kuna assignments mnanidai which I have not checked on, but I will. So December 2022 question 4B should be done. Should be done there. December 2022 is another, it's just the other day. So that sitting should be already checked and you should do it. Let me look on something different, which is very short. Let me look on something else. I think should be the last thing for tonight, or for today, sorry. Sasa nikuwe na a lot to cover. Useme mwalimu wame. So let us look on the double taxation treaties. Double taxation treaties. And when you look on the double taxation treaties, you know very well that these are the agreements entered between Kenya. These are agreements which are entered between Kenya and foreign countries They are entered between Kenya and foreign countries so as to protect their citizens against, so as to protect their citizens, against being taxed twice. So as to protect the citizens so that they are not taxed twice. So in this case, we are saying for a taxpayer to enjoy a double taxation relief, for someone to be able to enjoy all this, we are saying there must be an existing double taxation agreement. The double taxation agreement. There must be something regard between Kenya and the foreign country. between Kenya and the foreign country from where incomes was from where the income was earned. B, right? The Kenyan tax on foreign income the Kenyan tax, sorry, should be a Kenyan tax on foreign income. The Kenyan tax on the foreign income is more than the tax paid. Is more than the tax paid. It's more than the tax paid in the foreign country. In the foreign country. Number C, the taxpayer must be a Kenyan resident. The taxpayer must be a Kenyan citizen. Must be a Kenyan citizen, right? Now, I just want to stop at that point, but when we meet, we shall start by doing May 2021, question number 3C. May 2021, question 3C. And I said, let us be prepared so that because kama ningefanya asubuhi na hii masaa, nafikiri ningebakisha a very small thing, a very small details. So I'm expecting on Sunday, we will be able to rearrange ourselves and look on how we can be able to push the remaining topics, which I think they must be handled together like how we have done today. So there is no any larger topic which requires a whole class. Any question? Any question?
Excuse me?
Yes.
You, in the last class,